Tight occupancy registers in the Los Angeles apartment market, and rent growth tops the national norm by a sizable margin. But performances by neighborhood vary quite a bit, especially at the top end of the product spectrum. We're going to talk about the LA stats on today's Apartment Market Dynamics from MPF Research. I'm Greg Willett, joined by Cameron McIntosh. Cameron, let's start with that rent growth story. Now, this one was slow getting out of the gate as the U.S. apartment market went into recovery, but of late, the numbers have been really, really strong.
Rent growth for new resident leases in Metro Los Angeles have been increasing for a full 5 years. For the first 4 years of that time period, annual rent growth came in at a modest 3%. More recently, annual rent growth has come in at a robust level of about 6 to 7% for a full year. As of third quarter, annual rents were up 6.7%. That included a really nice bump seen in third quarter of about 2.4%. That was Los Angeles' largest quarterly rent hike in about a decade, Greg. But pricing has also been going up for residents who are choosing to stay in their current apartment as their leases are expiring. For those who are renewing their leases as they expired in third quarter, rents increased 4.9%. The share of those expiring leases of people who are re-signing, Greg, came in about 53.3%.
Current occupancy in the Los Angeles apartment market stands at 97.3%. That is up 30 basis points for the quarter and for the past year as well. And that is the highest occupancy rate we've seen in LA since 2006. So quite a while since we've been at this level. Let's look at some numbers on how we got to those occupancy figures, tracking the supply and demand numbers. Demand was particularly strong at 4,536 units in Q3, taking the annual absorption tally to 9,532 units. In comparison, completions totaled only 798 units for the quarter and an even 6,600 units for the year ending in September.
Los Angeles is going to have to deal with ample short-term supply. In fact, ongoing construction of identified projects has come in about 21,000 units. Of that, 12,880 units are scheduled to finish up this coming year. So we're talking about a near-term completion pace, Greg, that is set to double the supply that was brought on last year. A whopping 37% of Metro Los Angeles' ongoing construction is found in the downtown submarket. Projects totaling 7,690 units are underway. The next most active submarket is the Burbank, Glendale, Pasadena area. Ongoing building care totals 2,247 units. That's about 11% of the market's total supply, Greg.
So lots of new product coming on downtown, but the other day you pointed out to me that these aren't really the giant high-rise towers we see in most downtown markets. What does downtown LA's typical new project look like?
Well, these are big projects, but the average apartment count is roughly 300 units. There are some towers, one 33-story and another 27-story, but more or less, most of these projects are 7 or 8 stories.
In the intro to this video, I talked a little bit about there's some variation in this market, and particularly at the top end of the product spectrum, and that really reflects this building activity in the downtown market. We see Class A rent growth is somewhat slower downtown than it is in other parts of the metros, and it moves around quite a bit. At some points, it'll be a little bit below what you see elsewhere, and then sometimes it is actually quite a bit underneath what you see for Class A product in other submarkets. As of Q3, the rent growth number for downtown's Class A properties was 2.9%. That was less than half of what we saw elsewhere. And then furthermore, this downtown product is having some impact on adjacent submarkets as well. So you've got some volatility in the rent performance in the Mid-Wilshire corridor as well as the Hollywood area.
Mm-hmm. And going forward, we are expecting that the Class A segment to remain Los Angeles' most vulnerable segment, particularly as more completions come online. This is really going to put pricing pressure on this segment.
Looking at LA as a whole, we do expect occupancy to backtrack just a tiny bit, but still remain really, really healthy overall, over the 96% mark. Same sort of story on rent growth, probably not quite as strong as it is right now, but the resulting annual pace of rent growth in the 4 to 5% level. So again, a pretty healthy performance on this one. That wraps up our look at LA's apartment market for the quarter. I'm Greg Willett. He's Cameron McIntosh. Thanks for watching Apartment Market Dynamics from NPF Research.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.